Hey guys, Forex Funnel here. Hope you guys are doing well. Hope you guys are doing great. Any new traders that are here, anyone interested in learning to become a profitable trader or learning new strategies, I'm the guy that will teach you guys a few strategies you guys can use. And the strategy is based off a video I posted yesterday. It's a double top, double bottom reversal strategy. It's basically a strategy based off a reversal within the market, and this strategy is based off areas of support or areas of resistance where price has been pushed around quite a bit. We will be using those levels, or in other words, we will be calling those levels kind of demand zones and supply zones, because those are areas where price does normally reverse or have reversals happening at. So I've got gold right here open on the market, and I'm going to show you that this strategy also works on gold, not only US30 and NASDAQ. So let's get into the video, guys. Let's get into the strategy. So the first thing we need to do is we have to draw up an area of support. We have to find where price is currently at, and is it at a level where price has been pushed away in dramatic ways. Well, yes, it has. We have price in an area of support. Price an area of support, or approaching an area of support, I should say. So I normally have horizontal raise, and I normally make my zones orange. So that was the first step, identifying an area of support or an area of resistance. In our case, it's an area of support where price has been pushed in dramatic ways, just like this. So it is only natural and according to the market that price uses this area to push away in dramatic ways. So we will have a lot of buying momentum coming in from this area. So let's push the market forward. So the first identification we had to do was find a strong level of support, demand level, or an area where price is most likely to find support. The second condition is price needs to be below the EMA, and that is second condition that we have met. And right now we are on the wait for price to form the first bottom. So let's play the market. So right there, right here, we have price forming the first bottom. You can see this is the first bottom because this is a low forming according to structure and market trend. So we'll make this box a different color. Let's make it green. Let's make it this green. So once price comes back to this green box, what we want is for price to interact with this box in three different ways. It should either touch the box with a wick, it can close inside the box with a candle, or it can have a candle running through the box, but the body of the candle closes either inside the box or above the box. We can't have price closing below this box, otherwise that would mean that price would continue in the downwards direction. But since we have the confluence of this termination zone, which is the green box, and also the confluence of having this demand level, we should be seeing price start to move away from this level. So let's push the market forward. Right there we have our second bottom, and these candles need to be at least, I would say 20 from 10 to 20 or 30 candles, your double bottom needs to be made out of at least 10 to 20 or 30 candles, not more than that. So we have our second bottom right here. We have price created a wick inside of the box. That's our second condition met. Actually, our third condition, our third would be our entry, and our entry will be the first green candle after the second bottom has formed or price has made contact with the box. So the first green candle, our stop loss, will place that below the box. And to be safe, you guys can have a 1.1:1 risk reward ratio, or you guys can have a 1.5:1 risk reward ratio. It's just the first one has a higher chance of being smashed, but I normally have a 1.5. So let's push the market forward. As you can see, price in fact did smash our TP. I just want to show you guys that the confluence of this box, termination box, and this area of support, which is a demand zone, has an effect on the price. And this is called a double bottom reversal strategy. So we can see price is starting to reverse all the way back up. Right now, guys, I'm gonna show you guys an example of the double top on gold. I just showed you guys a double bottom on gold, so I want to show you a double top on gold. Same rules, it's just applied in an uptrend right now. So the first thing we need to do is we need to find a resistance level or a supply zone of some sort that has pushed the market around a couple of times, or as we can see, every time price came to this area right here, it kept dropping. So I will use that as an area of resistance and an area of support. Right, there's the first thing you need to identify: a supply or resistance level. So I normally have these levels made out of a triangle box and as well as a couple of horizontal rays. It's just easier, guys, to have zones and knowing how to use them. So as we can see, every time price came to this area right here, price has found resistance, so that means it's a strong area of resistance. So that's the first thing we need to identify for this double top reversal. So the next thing is to check if price is above the EMA. Yes, price is above the EMA. The next thing is we will have to wait for price to create a first top at this area of resistance. So let's push the market forward. So I would say this would be my first top, because we have price pulling down. So this would be my first top. Now I'll make this a different color. So right now we are waiting for price to pull back into this area since we have our first top. So let's push the market forward. So right there we have our second top. As you can see there, guys, this is very important. This is actually what I want you guys to see. I want you guys to see that even though these wicks are above this area, above this orange box, price still closed within this box. So that's important, guys, that price closes inside that box, because we don't want price to close above this box, otherwise it would have been a continuation of an uptrend. But right now we can see that our entry is the first red candle after first contact with a box. So we will put our area right there, and we will put our stop loss above the high just to be safer, guys, and it is in this area as well. of support, resistance, this huge area of resistance, which is our supply zone. And I would have a 1.14. So let's push the market forward and let's have a look. Right guys, we are on the Euro USD, or we can call it the Euro USD guys. I want to show you an example of a double top on this pair as well, to show you guys there. You can use this in different markets, different currency types. You guys can use it in stocks as well. So I just want to show you guys that you can use this in any type of market. So right now guys, the first thing we need to identify is the level of resistance that we are going to use. So it might help to go it might help to go back further in time. Excuse me. So the first thing you guys need to do is draw up a level. As you can see, price is also at the level of support. So I wouldn't be angry, disappointed, because this right here is a morning star candle pattern. Prices form somewhat, but won't be surprised if price moves all the way, pushes all the way up from this level because of this candlestick pattern as well. Just push the price forward. So right there, even though this was an area of support, prices has pushed into this area, retesting it. So I'm gonna get ready for my double top. I'll just be drawing up my box, which is drawn from the top of the wick to the body of those candles. So the next thing, we can see that price is above the EMA, and we are at a level that has been tested for support and resistance in the past. So we will have to see when price gets back to our termination zone for an entry. Remember, we need price to close below this box as well as have made contact with the box. So right there we have this huge wick. Right there we have this huge wick that pushed through the box, but price eventually did close below this area. So that's what we were looking for. And the next step is to enter at the candle, the next red candle, which forms after the second top. So that would be my entry. Stop loss above the box, entry at the first red candle after the second top, and we can have a 1.14 risk reward ratio. And let's push the market forward.